Well, Trump's announcement of a ceasefire had an immediate impact on our share market, with the NZX 50 gaining 1.7%. And oil prices have plunged. Brent crude's trading at $92 a barrel. Now, that's down about 16%. But the price at the pump is still eye-watering, with motorists now paying an average of $3.80 a litre for diesel. The Reserve Bank today warned that the inflation rate could reach 4.2% in the June quarter. But despite that, it decided to keep the official cash rate on hold at 2.25%. Here's Zane Small.
Arvinder Singh has just purchased his first home, a two-bedroom flat in the South Auckland suburb of Papakura, which he used to rent.
The property went on market and we were approached that, hey, the owner is deciding to sell and he wants to give us the opportunity.
He bought the property for $540,000, but with only a 5% deposit. Therefore, he's paying a low equity fee of 1.2% on top of his normal interest rate of 4.59. You can handle it?
Yes, I can handle it.
Thanks to the help of his financial advisor, Izaz Hussain, who, in these uncertain times, takes into account the high cost of living when assessing his clients.
Mortgage is not the only thing they pay. They pay for house insurance, content insurance, car insurance, life insurance. They also contribute towards KiwiSaver, household goals and things like that. So I itemize everything.
The uncertainty is caused by the Middle East conflict and the subsequent rise in oil prices, which is already beginning to filter into the supply chain, with the latest Cordell Construction Index showing price increases across a range of materials, from piping to lighting. And that inflationary pressure risks undermining the long-awaited economic recovery. That's why the Reserve Bank today kept the official cash rate on hold at 2.25%, despite rising inflation.
Today's decision to hold the OCR rate balances the risk of reacting too early to near-term inflation that monetary policy cannot prevent, with the benefits of responding preemptively to the risk of higher medium-term inflation.
In other words, the Reserve Bank didn't want to lift rates too soon and prevent the economic recovery by reacting to inflationary pressure that New Zealand cannot control, such as rising fuel prices. But the central bank is responsible for keeping prices under control, and its own forecasts show the inflation rate rising from 3.1% now to 4.2% in the June quarter.
Assuming that outlook for oil prices and what that means for fuel prices in New Zealand, and also assuming that some of that will be passed on to higher transportation costs, airfares, and to a little extent also to food prices, that is exactly what the 4.2% is based on.
It's understandably difficult to make such forecasts with the outlook of the conflict changing with each day. The latest fuel stock update from officials today shows there is still plenty of supply in New Zealand, with more than 60 days of petrol, nearly 53.5 days of jet fuel and 51 days of diesel. And Trump's announcement today of a ceasefire caused oil prices to plunge.
But prices here typically respond quickly to oil market moves, usually within a week or so. But this may take longer in this instance, given the heightened volatility in markets and the residual uncertainty about the geopolitical situation.
The effects of the fuel crunch are expected to linger.
Despite the positive development with the ceasefire, it is unclear still how fast cargo will begin to move through the Strait of Hormuz should the ceasefire hold. Oil and gas facilities have also been damaged or shut down across the region, and these will take time to bring back online.
If businesses start baking in higher prices, the Reserve Bank will act by hiking interest rates. And there are 2 increases expected before the end of the year. It's a lot of uncertainty right now. Does the conflict overseas make you feel uneasy about investing?
Not really. Like I've always felt New Zealand been a nice secluded place. You know, you're well safe here. So and we are quite far away from that chaos.
Arvinder choosing to focus on the pros of property ownership in New Zealand, what he views as a secure investment in uncertain times.
Well, kia ora, Zane. Did the Reserve Bank discuss lifting the OCR sooner?
Yes, we're told it was discussed today, but the Governor made it clear that there was no appetite for it to be lifted today. I understand it was more around whether an increase to the cash rate could come sooner than the end of the year. We'll get a better sense of what's to come next month when the Reserve Bank will announce the next cash rate decision and provide a more fulsome economic outlook. May will be a big month because that's when the government will also release its budget. Today's update from the central bank wasn't initially supposed to include any economic forecast, but the bank felt it was appropriate to include that inflation projection given the high level of interest, even if it is based on highly changeable data.
Indeed. OK, Zane, thank you so much.